Hi, welcome to the Asia Climate Capital podcast. In each show, we tackle the business and finance trends of the energy transition and decarbonization in Asia, with the capital markets in mind. Please do send us comments or topic ideas to the Asia Climate Capital podcast at gmail.com. This will allow us to make sure the content is useful and relevant to you as well as other listeners. Welcome to episode 5 of the Asia Climate Capital podcast. It's Monday the 11th. Our guest is Arun Kumar Singh. Arun is joining us from India's capital, Delhi. Arun is currently PTC India's head of technology. PTC India is focused on offering power trading solutions, cross-border power trading and consultancy services in India, as well as other places like Nepal, Bhutan, Bangladesh, and others. In the past 3 decades or so, Arun has amassed a great amount of power sector experience as a consultant, as an equities analyst, and as a senior business executive. And then there's more details on Arun's background in the show notes. Please note, as always, that Arun's statements today are purely his own opinion and do not represent the opinions of past or current employers in any way. Hello, Arun. Thank you so much for taking the time for today's episode of Asia Climate Capital Podcast.
Hello, my pleasure.
Great. So today we're going to be discussing, how to go about digitally. It's a tongue twister here. Digitally de-risking clean energy investments in India. We'll split up the discussion into roughly 3 parts. First, I'm going to ask you about, how you've actually got involved into the energy transition in general. Secondly, talk a little bit about the crossover of digitalization and clean energy projects investments, and what is the role of digital energy technology and solutions in reducing the investment risk in clean energy projects. And then finally, we'll ask you, to get your crystal ball out and give us some sense of forward-looking thoughts on the subject. So Arun, could we start with you briefly telling us how you became involved in Asia's decarbonization and how you describe your involvement today? I mean, I know that you've been in the electric power sector for in and out, directly and indirectly for the last 30 years. But how did you and when did you become more involved with the decarbonization and front of things?
Thanks, Joseph. As we professionals working in power sector in different capacities, as you listed out, I've worked as a management consultant, then equity analyst, and now as part of the corporate leadership for power trading companies. We have been seeing this transition in the business as we see, because fossil-based energy was initially the main source of energy. End use was mostly driven on use of oil and gas as far as the transportation energy is concerned. And over the years, over the last almost two and a half decade or 3 decades we have been working here, we see this transition. And this is a global phenomenon. This is not something which is confined to any 1 or 2 countries. The only difference is that the variation in some countries may have moved much faster and some countries may be moving from behind. The key issue in any transition happens when, one, of course, there is a global public opinion which has been created because of the global warming issues and Paris conference and many other events which have taken place. So that issue is now settled, that the world needs to move towards a fossil-free source of energy. Now, the only question is that will the investors put in the money? Because that's where the rubber meets the road issue comes in. Now, investors put in the money if it is profitable and if it makes sense from a long-term business perspective. And that both you and me, we have an equity analyst, and we understand that for investors, the color of money doesn't change as long as they earn a good return. Now, that time has now, I think, come. because if you look at it in terms of the cost of generation of energy, now, for example, in India, the solar power costs in last 4 or 5 years, what we have discovered is less than 3 rupees, which is equal to 3 or 4 cents US. I'm talking about the US cents. So obviously the cost of solar has come down to 4 cents and cost of wind is close to that. On the other hand, the cost of coal-based generation, which was earlier the main and the primary source of energy, has gone up, and that is primarily driven by new projects. When we're talking about the coal-based generation, any new project which is being set up in India using coal as a source of fuel, they probably will have 6 or 7 cents of per unit per kilowatt hour of cost. So obviously there is a cost economics which is worked out in favor of the renewable energy. And that's as a moving cycle, we go forward with the cost of modules coming down, and we have seen this. And this, again, is a global phenomenon. China has been the leader in bringing the module cost down, but this has been followed by other countries in India, especially when there is a significant amount of volume. And so as we see the cost curve and specifically the Asian economies are most cost sensitive. I mean, Europe and US is a little bit, they do investments in areas which may not be the cheapest, but typically in India and the rest of Asia, I have seen at least, I used to cover Malaysia and some other countries also, cost is the driver. So if the cost comes down, cost of energy comes down, then obviously it makes sense for investors to make investments there. And that's why we are seeing renewed interest. And in fact, in India, if you look at it, last 5-6 years, major investment in new generation capacities have been in solar and wind. Very limited investments have gone into coal. Other countries like China have already stopped it. US stopped it long time back. Europe stopped it long time back. So coal-based generation is kind of confined to a few countries, including in India. But the rate of additional investments have come down. And that is how, so as professionals, we are working in this segment, we all understand that this transition is happening, and this transition has certain bottlenecks, and that's where I'll bring in the technology, which I talked about earlier. The question then comes in, if the solar or wind is the cheapest power, why we are just not using, why it is only 10% of the total energy uses, why it is less than 20%, even at a global level. If we just actually, 2021, we saw wind and solar hitting 10% of the total energy consumption at a global level. But why it is only 10%? If the new source of generation is cheaper than the fossil-based generation. Answer to that is that the intermittency and the intermittent nature of these sources, if the source of supply does not meet the demand pattern, that's where the technology comes in. So, for example, our demand has got a certain demand curve, but supply curve has to match that. And my involvement has been more in that. Now my major part of involvement is how do we match the demand and supply curves? How do we bring in new use of technology to bring that matching of demand and supply curve using the green or non-fossil based energy as we go forward? So that's where the technology steps into the transition.
So talking about all the cost economics that you mentioned, and then renewable energy, especially solar and wind's biggest issue, which is there's no solar power when there's no sun, there's no wind power when there's no wind. What about the cost of energy storage in India? Before we get into the digital kind of side of things, is that something that you see growing quite substantial? Is there a lot of investments going in there? Is it getting cheaper? What's the trend there?
It's getting cheaper. But still it is more expensive than say a fossil-based generation. So per unit cost of storage would be anything between 8 to 10 cents per kilowatt hour, which is again expensive. But then we are working out multi-tier storage solutions. Right. So one is battery for transition, because because there's also this issue of the raw material for battery being available and the cost going up, because if the entire world moves to EVs and the other means of transportation through batteries, there is an expectation and the projection by analysts that the cost of storage might not come down as much as it was expected if you just use battery. But there are other things being used. For example, the things like reserve capacity when in the hydro generation. Then pump hydro is also being used. You pump the energy and then use that. So you got to use a multiple mode cost storage to bring the average cost of storage down. Because if you just rely on one source, which is battery, the most convenient and most well understood, then the cost may not come down as much as we expect. And it's very important that the cost of storage is brought down almost on par with the fossil-based generation. And if that's where probably that be time when the transition will be complete. Right now, we are still in the curve where the fossil still has a very significant share of energy supply, and that's probably the reason the cost is the one which drives that. Cost of storage is coming down.
So, Arun, getting into the second part of the conversation, which is the whole digitalization and clean energy projects investments, could you please dissect the relationship, especially within the Indian context? And by the way, if you don't mind, as you answer the various questions, I may kind of interrupt you suddenly so as to clarify some of the concepts or mechanisms if needed. I hope that's okay. So yeah, if you could be the surgeon and try to dissect it.
See, Indian market, I mean, I'll this time focus on Indian market, because Indian market has been largely driven by regulation. When there is an act, Electricity Act, which came in 2003, and post that there was always an encouragement to encourage a robust short-term market, which is around 10% of the market, but which is on the market. It makes a lot of sense because that gives you market signals. And this gives you a sense of whether because we have a market where the market is divided into 15-minute block. So in each day, there are 96 prices for power in the short-term market. 10% market is what we call the short-term market. And when we say short-term market, it is the daily market. We are not buying power more than 1 day ahead. So we have two markets, what is called day-ahead market and intraday market. And that 10% power is sold in the daily market. And that's a significant amount because it provides you a clear-cut market signal and clear-cut idea to an investor that where the market is headed, what should invest in. For example, the prices in the morning and evening peak, those 5 blocks or 6 blocks, can shoot up to 100% more than the lowest price in the day. So a particular investor, if they're just interested in investing in, say, battery storage, they might like to just target those slots in the market to be able to maximize the returns. So it's a clear-cut market signal driven, and there the regulator and the government play a very important role. Regulator recently came out a few months back with what is called ancillary services regulation. Ancillary services regulation is basically the market which is for the last 15 minutes, where the load balancer actually encourages a battery. It could be a battery services, it could be a pump hydro, it could be anyone who wants to register themselves and play in that market. And that is a very important aspect because end of the day, the frequency of the grid, which has to be 50, and if the frequency falls, so again, the grid itself has been created as a kind of a disincentive for underdraw, overdrawal. So anybody who is injecting to the grid more than or less than the scheduled injection would be discouraged to do that because then they have to pay a penalty. Anybody overdrawing from the grid because of the reasons they could not foresee the demand will have to pay a penalty if the grid frequency varies. So there are clear-cut market signals for the ancillary services, for the services like battery operators or services like a pump hydro, who might like to plan their investment accordingly in playing that. But again, this is a very agile market, if I like to call it, a market which is very, very can change significantly in a very short span of time. You need digital tools to be able to control or at least predict the market. Because if you're not on a auto mode, if you try to do all those things manually, you will have difficulty in trying to maximize them. It's not a 25-year power purchase agreement and you get a same rate over 25 years. It's a market where you can make money or lose money. It's like a capital markets as we have seen.
So in terms of the kind of digital solutions, could you kind of get into that a little bit and how that interacts with everything that you just mentioned?
Yeah. So digital solutions starts with forecasting the demand accurately. So a demand, as I said, in Indian market, demand is market is divided into 96 blocks in a day. Every 15 minutes is a different block. So every 15 minutes can be different price and different quantum of demand. So you got to predict the demand in advance for the next day in a block of 15 minutes. In future, they're saying the market will be brought down to 5 minutes. And so obviously it'll be more supportive of injection of more renewable energy into the grid. Also, there is an intraday market. So you need to be able to predict the actual quantum of demand at a very short span of times. For example, next 1 hour, next 2 hours, that kind of a demand. And a very 99% accuracy levels is what you need, is you are expected to be able to achieve that. So one is the demand side. Secondly, when wind and solar are generating, it's very important to predict the supply. Because if I have a wind farm and I'm a grid operator who's expecting a wind farm to supply the power, I got to ask them for a schedule in advance. And if they don't meet the schedule, I need to penalize them for that. So currently in India, you can revise your schedules, but a generator has to provide a schedule in advance to the grid operator. And if there is a deviation more than 10%, it depends on different states. But for example, Gujarat, if you deviate more than 7%, they impose a penalty on the generator. So any wind and solar farm has to first provide the schedule in advance and then meet the schedule. So you need to predict the supply curve accurately for every block. So every 15-minute accurate prediction of supply is important. And as I said earlier, the prediction of demand. So demand supply prediction is one thing which uses a lot of AI ML tools, because you have to integrate the weather parameters. India being a tropical country, a lot depends on if it's how much the temperature will go up. 1 degree change in temperature can change the demand by almost 10%. That's a significant kind of an impact. So I mean, in Delhi, for example, today it is 42 degrees Celsius. It goes to 44 degrees Celsius. Delhi demand can go up by 1,000 megawatt. The city of Delhi. So there's a significant impact of weather conditions in India. I mean, just to give you an example, Delhi's peak demand in summer is 8,200 megawatt, and the minimum demand during the winters goes down to 800 megawatt. So 1,800 to 8,200 megawatt is the variation over a year in a city like Delhi. So you can imagine India's demand being a large country with diverse climate conditions. So it's important that you are able to give that prediction to the load managers. So load dispatchers need to know in advance what is my demand tomorrow. Then third solution comes in when load dispatcher has multiple power purchase agreement with different generators, different sources of supply. They need to take a decision in advance which ones they will call for tomorrow. So typically, the Indian market is scheduled at around 5 o'clock in the evening for the next day. So from starting from midnight to next day midnight, the schedule is all finalized by 5 o'clock. So the schedule managers need to know that tomorrow what is my demand and who all will be supplying to me. He also needs to tell the guys or the generators whom he doesn't want to say that we don't want you to generate tomorrow, because generators also need time to ramp up, ramp down. If a particular plant needs to come up, especially coal, they need to know sometimes in advance that they need to be generating this much power for tomorrow's supply. So this is a place where and earlier, because most of it was coal based or gas based, it was very easy to ramp up and ramp down the demand and supply depending on the conditions. Now, with the share of renewable going up in India at a national level, it is around 10%. But in different states, it could be as high as 20-25%. States like Karnataka, Gujarat, Rajasthan, the share of renewable is very high, more than 20%, 20, even 25%. And there, the uncertainty also comes from generation. How much generation will come? Because, give an example, a solar megawatt project of 1,000 megawatt has a reverse U-shaped curve. So basically, 8 o'clock, that 1,000 megawatt might be generating around 200 megawatt or maybe 100 megawatt. It goes up to 2 o'clock, it goes to 1,000 megawatt, and then it starts to ramp down. So the curve of the solar generator, the load manager need to know. And that is where the technology, accuracy of forecasting, quality of forecasting comes in. Use of data to balance that load becomes very important. Because given that the rates of solar generators have already come down, or wind generators already come down to 4 or 5 cents, if they lose further because of the penalties imposed by the grid, their returns will be severely compromised, and investors will ultimately suffer because of that returns being compromised. So it's very important that the technology or digital intervention plays a more because very clearly, if you see the world moving towards a 50-60% share of renewable energy, digital will become more and more important as we see going forward.
So you spoke quite a bit about the digital technologies and solutions on the accuracy of forecasting generation side, accuracy of forecasting the demand side, accuracy of forecasting the helping with the forecasting of prices. How is the actual technical interplay between the generators, the grid, and how do the power traders come in? And what I mean is, obviously the grid will have a very good idea what the generators are doing, because the generators have to tell the grid what they're doing, basically. So all of that is linked. But is that open source? Is it open data? I mean, do others have access to I guess what I'm trying to say in a long-winded way, how transparent is that?
So it's pretty transparent. In the Indian grid is pretty transparent. They put the power, the data on the website. It's the frequency is known to everyone at any point in time. It's pretty much public data. Advance, maybe not public data, but 1 day in advance or 2 day in advance is what grid operators. So Indian grids are divided into state grids. So each state has their own grid. And then that is together integrated at the regional level. So we have 5 regional grids: northern region, eastern region, western region, northeast is in one region, a southern region. So and within that, there are state grids. So every state grid, which is called State Load Dispatch Center, basically calls for supplies depending on the demand they have. So the load dispatcher gets the demand from the distribution company, the discoms which they have in the state. The state may have one discom, more than one discom, depending on the particular state. India doesn't have a uniform system. So let's say a state has 3 discoms. So discoms will tell the load dispatch center saying, tomorrow's my demand in each of these 96 blocks is X, 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 Y, Z, whatever. So they give them 96 demands for the next day, today at morning 9 o'clock. And then based on that demand, the grid operators calls for all the suppliers, because grid operator knows who all have a power purchase agreement with the state. And if there is a shortfall, then they go to the intraday market, which I told you about, the 10% short-term market. So they can go to the day-ahead market or intraday market to meet the shortfall. If there is a surplus, they go to the market, same market, to sell their surplus. So a particular state has to plan in 1 day in advance. Morning 9 o'clock, 10 o'clock, they do the planning for the next day. So they look at the demand, they look at the possible supplies they have. If they have a surplus, they'll say, okay, we are going to put this whole surplus into the short-term market, on a day-ahead market. And if there's a deficit, they'll go to the market as a buyer. If even after the day starts, if suppose there is still a variation from what they had planned, there is an intraday market, they can go to the intraday market also when there is a surplus or a deficit. Typically, India has two peaks, morning peak and evening peak, which is, so morning peak is anything between 8 o'clock to 11 o'clock, 12 o'clock. That's the morning peak. And then the evening peak, which is a bigger peak, when the lights go on from around 5 o'clock till 8 o'clock, 9 o'clock. That's when the prices are the maximum. And intraday market and the day-ahead market basically reflects that price. In recent months, we have seen a very huge price spike because suddenly the temperature went up and there was a coal shortage or coal supply was limited. We saw a huge spike in prices in the Indian market. So clearly this is where, because prices can vary between 3 rupees to 20 rupees. And if somebody loses money on that market, there may be 10% of the market size, but if you're not able to forecast that, if you're not able to predict what is your demand, you might end up paying a huge amount of money, and your whole balance sheet and the P&L will go for a toss. That's where the digital comes into the play. To be able to accurately, you may still miss out some days, but on a 365 days, you should be able to get it right on 350 days or 330 days in a year. If you get it right, you're okay. But if you don't get it right, you can't do it intuitively anymore. The smart dashboards where the management decisions should not be taken on intuitions. Management decisions should be taken on the data and the information which is available. So data also needs to be now customized to be able to help the management, the utility managers take decisions. That which are the best sources for me? How do I buy power? Should I buy a long-term, medium-term? Should I go for the intraday market, or where do I get the best buck for my investment? These are the critical parts, and that will ultimately get reflected into the investors also, because accordingly, given the market and the market conditions, investors will plan their investment.
Just one missing part, which is we talked about the generation side, the demand side, the pricing side of things. But what about the actual consumer data? So we really just spoke about what is before the meter, so to speak, up to now. What about behind the meter? Is there a lot of information right now? I mean, how are smart meters executed in India?
Yeah, though the consumer data is still early days. We haven't yet got there. Smart meters are being installed, but not for every consumer, not for residential consumers. Smart meters are there for the industrial and high voltage consumers, but for the low voltage consumers, still on what should I say, digital meters, but not smart meters per se, where you can read the data real time. But we are moving in that direction. We are because now it is possible to actually do some IoT-based analytics at the consumer level also. Actually, I'm trying to work on some POCs on using some of the smaller areas. For example, in an area where 25, 30 distribution transformer level, where could be 300 to 400 consumers, to study their data real time and see what is the user's pattern, where the consumer, because there's a lot of rooftop solar being installed at a consumer level, at a smaller level. And to integrate the data in terms of actual consumer pattern also would be very important. Because for the utility, they will need to understand what is the user's pattern of the consumer, if somebody has installed a rooftop solar at their end or in one vicinity, those smart analytics have started, but still in the early stages, and we probably see that if that gets addressed, the ability of energy transition. So basically, ultimately, if you look at it, if the data is available for the decision maker, their ability to bring in more of the green non-fossil based energy increases to that extent. So energy transition is closely linked with the uses of data for decision making tools. So consumer data is the last mile, but it's still not fully done at this stage.
And I know you're not a lawyer by background, but are there any data privacy issues that investors would have to be concerned about, or right now that's still pretty open?
No, data privacy issues has always been raised, but here when we say data, it is data used at an aggregated level. No individual data is used. Plus, the data is protected. The cloud services, AWS or Azure or Google Cloud, have enough protections built in. So I don't think there is any possibility of data leakages, which is there. Thirdly, Indian laws do not allow you to take the data out, Indian consumer data outside of India. So most cloud operators have put the data centers within India at different locations in India. So there is no question of any data being pilfered out, one, out of India. Secondly, any data being used for any purposes other than what it is meant for to be, because nobody has access to data in a sense that they can misuse the data.
Understood. And perhaps just one last question on the subject. Is there much use of any of the kind of blockchain-related technologies? And I know that right now you are pursuing, a degree on that on that side of things. But is there much on the blockchain, etc. side of things right now?
It's still not started, but I see that as a very exciting area, because blockchain is basically what multi-ledger self-verified ledger system, where once the system is verified, once it is verified, nobody can tamper with it, nobody can question it. So clearly, especially, for example, carbon credits. So today, if you look at it, the generation of carbon credits is between an end user and a buyer who can directly use it and exhaust it. There is no intermediary in between. There is no trader who plays a role in the carbon credits. A particular buyer is buying a credit because they need their own requirement to meet the obligation of carbon credit. What the blockchain can potentially do is that once the carbon credits or emissions credits can be generated, it can be verified through a blockchain technology. And then ultimately that will lead to ability to trade that emissions. So the trading will become much more efficient. I mean, there's no double counting which happens. Currently, what do? You create an Excel file. I am counting the credit. Somebody else will be counting the credit, and third person. So 3 or 4 companies might be counting the credit. So that the credibility of that carbon credits is to that extent limited. Same with the consumer data, with other information. So blockchain definitely is a new paradigm which will help especially in the areas of validating any reduction, any efficiency improvement, any additional generation of green energy through a very automated process. So we do see that as a users as we go forward, and that is world across. That is early days in India, not yet being extensively used. For example, EVs. Now, EV, how do you are shifting away from fossil to a electricity-based or power-based vehicle. Now, if you want to claim credits for that, how do you validate that? There has to be a process, and blockchain might come in handy in terms of validating that and in terms of capturing that in terms of a token. So I see that potentially a very, very important tool for I would say, creating a market for emissions going forward.
And are there any use cases already that you know of in India?
There are a few, not in India, but internationally, yes. In Europe, I know a few companies where they're focusing on forestry-based emission capturing. So basically, once a forestry project is implemented, there is a third-party validator which says that, okay, this forestry project has been implemented, these many trees have been planted, and there is a scientific method, third-party validation of that particular project. Once the project is validated, they capture it through a token. So, yeah, there are a few projects, as far as I'm aware. I know this forestry project, but I potentially see that a huge uses in the EVs industry for capturing that for blockchain. Clearly, that would be an area to look forward to. And that will help the energy transition in a significant way. Because ultimately, as I said in the beginning, if it is beneficial to an investor, if it makes sense to make an investment, they will make the investment. And minimizing the pilferages, minimizing my risk of investment going down would always help new additional investment. And blockchain will help do that.
Of course. Cool. So I guess we can kind of move on to the third and final part, which is given that you've actively participated in a variety of aspects of the Indian electric power sector in the past 3 decades or so, what is your best guess in terms of the interplay of de-risking clean energy projects in the country through digital technologies and solutions?
Best case would be that, see, the process of transition has already started. It makes economic sense to use green energy. So it makes a lot of sense, people for now to installing the solar project. If suppose you have a land, if your house where there is enough land to install a project, because it will be cheaper to you. So it does make business sense. So only question is now that after it makes business sense, how do I use it? What is the use case? How does facilitation happens? And those support industries. Same for electric vehicles. Now with the Ukraine crisis on, the diesel and the crude prices at all-time high, not all-time high, but at a very high level, we are paying huge amount for petrol or gasoline or diesel. People say, okay, it makes a lot of sense to buy an EV because it's actually operationally cheaper. So it does make a lot of economic sense to go through energy transition. So the process is irreversible, in my view, absolutely irreversible. We not going to not see this happen. Only question is that at what pace, that of course is a matter of opinions and conjectures. But I see that next 10 years would see a very, very huge paradigm shift in the way we are talking about. I mean, today we are talking about will that happen or not happen? 10 years from now, at 2020 or 2030, 32, we'll be talking about, I mean, are we going to still use fossil or should we use some fossil or not fossil? Because fossil doesn't have a long life, more than 20, 25 years. I don't see that lasting longer than 25 years. That would be my guess. India might not reach there in 15, 20 years, might take a little longer because obviously we follow the Western countries' processes. But by and large, once the acceleration process starts, in next 25 years to 15 years, we probably will see I think a very large transition. I don't know about 80%, 70%, very hard to put a number to it. But we will definitely see more than 50% sources from non-fossil sources in whatever the future time. So,
yeah, I think it's an interplay of a variety of factors in terms of, whether I know that India said 2070 net zero target, but I think at the end of the day, that number is very is not very crystal clear right now, because if you still have continued, at least in my opinion, a continued volatility and very high level of coal prices, gas prices, oil prices, then it just makes a lot of sense to go into the energy transition at a much more accelerated speed. Plus, you have also the energy security side of things as well, right? So I think that's but I guess one thing that will be necessary is investments in digital technologies and solutions. And how do you see that progressing? Do you see a lot of momentum?
No, see, that's where I think we still need to educate people, because that's a real problem. A real problem because most of the senior people in the sector or in the industry are coming from a generation they have for them this digital technology is relatively speaking new. I mean, I'm not saying that they don't know it. Everybody uses computers, everybody uses emails, so it's not that they don't know. Just that the power of that is still not believed by them in full. So they still think that it might be a challenge. And plus, the digital technology itself has to come out with solutions which is fail-proof. Because if I am able to forecast my demand 5 days in a week correctly, but 2 days it fails, the problem is that people always point to those 2 days where you got it wrong, and then it was a problem. So we will also have to come out with a almost fail-proof kind of a solution, which I think is possible. The challenge today is that a professional like you and me is still learning that digital, and the digital guys, the Microsoft or an Amazon guy, or they're also learning our business. So that's where the interplay is still taking time. Because those who are digital savvy, they don't understand the business nuances of our industry. And those who understand the business nuances, they probably are not that digital savvy to be able to translate that solution immediately. So somebody like me learning that is basically to bridge that gap. Then I'm trying to do that, to bridge that gap. And hopefully there will be more. I mean, of course, there are many other people who will be doing it. As we go forward, like we all use computers today. I mean, we didn't use it 20-25 years back. We didn't have personal computers then. Of course, we always had a computer. So I think this will become a way of life in the next generations to come. And I was recently reading the interview of the top management institute in India, IIM Ahmedabad. The director's statement said that what is the change which has happened in the curriculum? Two changes which he said. One change was more introduction of technology in the curriculum. So in the management curriculum, they're teaching technology. That will help. Because if the new graduates coming out of the schools understand the technology as a business mirror, then it is not that difficult for them to adapt that technology. So technology will also have to kind of reach out with solutions rather than just saying that this is a technology. Like if I have to say use blockchain for emissions credit reduction process, I will have to create a business case. I will have to use a use case. So that is where it is taking some more time. But as you know, these things initially take their own time. But once the process starts, once it starts clicking, it is a matter of time. Then it moves. Then the move is pretty smooth and pretty straightforward. So I mean, next 3-4 years probably we'll have that kind of a situation where we'll still ask questions. But I think going forward, we will resolve that issue as we move forward.
Makes sense. Well, Arun, that was really an enlightening. I really enjoyed listening to all of your different insights and points of view. That was really great. So yeah, I just wanted to thank you for your time today.
Thank you so much, Joseph. It's always a pleasure to catch up with you and connect with you. It was fun always when we work together, and it will be fun again when we again connect. Thank you so much.
I trust you found the conversation useful. As always, feedback is really key, and in order to make the content useful and relevant to you and other listeners, please do give us some feedback. Also, please like the podcast in whatever podcast app you use, and send us your comments, your thoughts, your ideas for topics anytime at the Asia Climate Capital Podcast at gmail.com. That's the Asia Climate Capital Podcast at gmail.com. Thank you.